All right, good morning if you're in British Columbia or the West Coast, and good afternoon if you're just about anywhere else. We have a few people here overseas as well, so I'm not sure what time zone you're in, but either way, welcome to today's webinar, How I Day and Swing Trade the Market. I'm going to be showing you live the kind of things that I do through the day. I will actually look at some of the stocks that are in play today and where I took trades, where I didn't, different signals that we got with my strategies. We've got our largest audience ever for a webinar today, so it's always exciting to see so many people taking an interest in active trading. It really is a great way to pass the time or make a living. I've been trading for 25 years, and I just love the trading lifestyle and that sort of thing, and it's exciting to be able to share that with all of you. So what I'm going to do today is walk through a little bit of a presentation, but also show you some real life examples from today and yesterday on how I trade the market, both day trading and swing trading. So an overview for today, I'm going to do a little bit of my background, very short. We'll talk about my active trading concept, how I approach the market as an active trader. We'll do a little explanation of what strategy trading is all about. I will explain and show you my process for day trading and also how I build my day trading watch list. We'll also look at the swing trading process, what I do to identify swing trades, which are trades that we hold for more than a day, but typically less than a couple of weeks. Talk a little bit about the upcoming May training classes and education in general from Stockscores.com. And then finally, I'll show you today's action. We'll look at what's on my watch list today, what I did, my general thinking about the market today, just sort of real life examples from what I talk about for the first part of the presentation. We also have Wayne and Daniel on the webinar today from Desjardins Online Brokerage. For those in Canada, they have a great offer to get access to my tools for free, to get access to my education at a real discount. And so they'll come on for 2 or 3 minutes and just explain how you take advantage of that offer. So my background, I've been trading for 25 years. I started trading when I was 19. I borrowed a little bit of money off of my credit card and took some money that I had saved from my job pumping gas at Calgary Co-op, which is a gas station or a supermarket chain in Calgary where I grew up, and really paid my way through university. When I came out of university with a finance degree, I decided that I was going to try to make a living trading the market. Now, my parents thought I wanted to be a lawyer or an investment banker, and I think they were probably a little disappointed that I chose to be a stock trader, but it's worked out quite well. I've made a lot of money from the market. I've also built some of the tools that I share with people all over the world. I'll show those tools today. So at one point I took $30,000. This is pretty early in my career. I had sort of accumulated $30,000 in capital, and I changed that into $500,000 in 3 months, and that really gave me the capital to not only trade for a living, but also to build some of the tools that I show you today because they were pretty costly to create. I've, as I said, created my own proprietary tools and indicators. I really think that if you do what everyone else is doing, you're going to get what everyone else gets, which is average. And I don't want to be average. I want to be able to beat the market. And to beat the market, I really think you need to have an edge. So that's why I built my own tools, my own indicators. I'm going to show you all of those today. I've been teaching people how to trade the market for about 15 years and continue to teach not too many, maybe 100 people a year, my methods and how to not only day trade and swing trade, but also longer term investing for those that don't have the time or the interest in active trading. So today's presentation is focused on active trading. This is what a lot of people call day trading, but I differentiate between day trading and swing trading, and I'll explain a little bit of the difference today. But the general concept that I approach the market with when I am actively trading the market is to focus in on the stocks that are not only very liquid, and by liquid I mean trading very actively, but also trading abnormally. Stocks that are trading more volume than normal with greater price volatility than normal. So at this time of year, because it's earnings season, a lot of the stocks that I trade right now are companies that are announcing earnings. And if their earnings are better than expected, the market really takes an interest in them. The institutions want to accumulate those stocks, and they tend to move very strong through the day. So I built some indicators and some processes to identify those stocks before most people pick up on them. and I then apply my entry and exit rules to that short list of stocks that are trading abnormally with very good liquidity. I will show you that today. Ultimately, what I'm looking to do is take advantage of breakdowns in market efficiency. The stock market is efficient. That's been proven countless times by researchers. And in order to beat the market, you have to find situations where the efficiency of the market breaks down. Otherwise, you really can only expect to earn what the market earns. So the job of every trader, investor, hedge fund manager is really to try and find breakdowns in market efficiency. Now, I find that there are a couple of ways that market efficiency breaks down. It tends to happen when there is emotion in the market, or when there is new information coming into the stock that makes the fundamentals worth a lot more or a lot less, and we can take advantage of those situations using some of the tools and processes that I show you today. We're going to look for entry points that offer a strong reward for risk trade-off. It's not enough to be able to say this stock looks like it's going to go higher. We also want to make sure that it's not only going to go higher, but going to go higher enough to compensate us for our risk. And a lot of young, when I say young traders, I mean traders early in their trading career, whether they're longer term traders or day traders, they really forget this aspect of it. We want to look for situations where the reward potential justifies the risk that we're taking. And you'll see me plot something called reward for risk lines on a lot of the charts that I show you today. And that's really the essence of my approach. It's not only me trying to find good entry points, but also find these situations where the reward for risk makes sense. Now, I am a strategy trader. I don't do fundamental analysis on companies. Fundamentals really don't matter in the short term. I'm looking for situations where I can get in and out of a stock in a relatively short time period because there is money flowing into that stock, whether it be because there's new fundamental change in the business, whether it be there's a real emotional reaction in the market. You know, we saw a stock yesterday where the emotions were very high. Now the stock was really being powered higher, I would say in a large part by greed. And greed is good for the market, or at least for traders. It makes us or gives us opportunities that we can take advantage of. So I am a strategy trader. I have a set of rules for when to buy. I have a set of rules for when to sell. I have a set of criteria for doing risk management, and I just follow my rules. I don't know whether I'm going to make money on the next trade that I do. What I know is that if I do my rules over and over and over again, I will make money because I have a strategy that has a positive expected value. Now, what do I mean by positive expected value? Essentially what that means is that I am trading a set of rules that if I do it over and over again, they will make money. The expected value of my rules is positive. Now, I want to use the example of blackjack. If you are a person playing blackjack, you are playing a game that has a negative expected value. The odds favor the house. So although you might get lucky and win on a particular day playing blackjack, unless you have the ability to count cards where you can put the odds in your favor, you're really playing a game that has a negative expected value. However, if you are the casino dealing hands of blackjack, you are participating in a game which for you has a positive expected value. You know that if you deal 1,000 hands of blackjack, you will make money as the casino. Now, you don't know what player is going to win on the next hand. You don't know what player is going to lose on the next hand. It's a random event. But what you do know as the casino owner is that if you deal lots and lots of hands of blackjack, you will make money. So you think about, gambling in general, playing lotteries, buying a lottery ticket has a negative expected value. For the government who sells the lottery tickets, it has a positive expected value. It's a real revenue generator for governments. So that's how I want you to think about the market. When you trade the market, you don't want to be a gambler. If you are guessing in the market, if you are, sort of trading on hunches or tips or that sort of thing, you're really no different than the player who walks into a casino and puts money down at the blackjack table. What I really encourage people to do is take an approach to the market where they are not gambling, where they are trading strategies that have a positive expected value. Now I'm going to show you the equity curve for the strategy that I day trade with most of the time. So this is a progression of equity in by following the rules of my one of my day trading strategies, the one that I'll show you today. It's called an intraday pullback play. So it started, this little test that I've been running started March 9th, and this graph ends April 30th. I'm still continuing to run the test, but for the purpose of our chart here, this is from March 9th to April 30th. And you can see that that line is moving up from left to right. Now, it doesn't always move up. You can see there's little dips lower from time to time, and those dips lower are caused by losses. So if it goes up, if that line goes up, that means that particular trade made money. If you get a little dip down, you are losing money. So you can see here there's 4 or 5 trades in a row where we generally went down. But overall, this strategy is consistently moving up from left to right. This is an equity curve that has a upward slope, and therefore that strategy has a positive expected value. Now, using a $1,000 risk tolerance on each trade, and there's about 170 trades in the time period that this chart covers, this particular strategy has gone from 0 to about 150, 158,000, I believe, is where it's at the end of April 30th. So that's the accumulated profit for taking $1,000 of risk. Now, if your risk tolerance was $100, then you would divide this number by 10. So you're up, or the strategy would be up $15,000 instead of $150,000. So your risk tolerance determines your position size, which determines how much you ultimately make or lose on each trade. Now, what I'm going to show you in a moment is my day trading process, how I create a watch list of the stocks that I'm going to trade each day. And typically, there's anywhere from 5 to 20 stocks on my day trading watch list each day. So I've got a couple steps. Number one is I build the watch list of the stocks that meet the basic criteria of my strategy. And then number two, I monitor that watch list using real-time charting tools for my entry signals. So there's 2 ways to create the watch list. One is we can use Stockscores.com, which is my website, and I've got a tool in here called the Market Scan tool, which you see on screen now. That Market Scan tool is, there we see it now, is the gives you the ability to scan the market for a variety of different things. You can see all the different filters here. Now I've got a scan which is available to my active trader students called Day Trader. I'm going to select Day Trader, and I'm going to run that scan, and it found for me 24 stocks that meet the basic criteria of my day trading rules. Essentially, these are stocks that are trading with statistically significant abnormal activity, abnormal volume, and abnormal price movement. So if I take a look at the 2-day chart of Magna, you can see that today Magna is trading a lot more volume than yesterday, and its price volatility is greater as well. And so the reason it comes up my watch list is that's what that scan looks for, is abnormal price action, abnormal volume. And also liquidity. This stock is trading, so far it's traded 13.6 thousand times. It's on pace today to trade 20,000 times. Now when I'm day trading, I want stocks that are going to trade at least 15,000 times a day. So that's why it's on my watch list. Now once the stock is on my watch list, I then jump to my real-time charting program, and I'm going to show you the program that I get from my broker. This is called DD Plus. I use Desjardins Online Brokerage. And there you can see the chart of MGA, and I then look for entry points on this chart. Now we had an entry signal here, we had another one here, we had another one here. Those times, or those little chart patterns that are on there, tell me that that stock has a high probability of moving higher from that point. Now the rules that you use to know that that's an entry signal point right there are taught in my different courses. I'll show you how you learn that in just a minute. But for now, I just want to sort of give you the process. So step one, build a watch list. We can use Stockscores to do that. Step two, monitor your watch list in real time using a charting program, whether you use the one from your broker, whether you subscribe to a third-party charting program. It's something that's entirely available fairly easily, cost effectively. Because I trade actively, I don't even pay for this. I get real-time charting from my broker for free because I'm an active trader. Now, I'll show you another way that we do this using some other specialized trading software. This is another program that I use, and this is something where I've set up my process in real time to build my watch list. Here are the steps that I do. Number one is I run a little scan that I've built in this program called the Gainer Scan. So this is a third-party charting program. It's something I subscribe to. It costs me about $300 a month. I grab all the symbols, I paste them into this screen, and I sort them by number of trades, and I grab the stocks that are going to trade at least 15,000 times. So I grab those, I copy them into here, and paste them there, and I then watch for the calculation of some of my proprietary indicators. So these two columns right here, expected trades and expected abnormal volume, are really applying my own proprietary indicators that I've written for this program to look for stocks trading with abnormal volume. And I've got quite a long list. Anything that has a value here of greater than 1.95 is potentially abnormal. It's almost the identical list that Stockscores found. So remember when we did the scan in Stockscores, we did the market scan, we ran that process. That scan from Stockscores is going to be very similar to this one because they're basically using the same metrics. The advantage of this tool is that I can do it in real time. Stockscores is delayed about 20 to 30 minutes for that scan, whereas this runs in real time. So to find those stocks early in the day that are worth trading, it really helps me to have that real-time charting program. All right, so that's how I build my watch list. Then the next thing I do is I monitor my watch list for stocks that meet the visual requirements of this particular strategy. Now you probably can see, I hope you can see on this chart, some little blue dots. I'll maybe see if I can make them a little bigger here. Let me just see if I can blow this up a little bit. So I'm going to make it a little bigger. Oh, that didn't work. Sorry. Try again here. I just have to be able to click on the dot, format. I'm just going to make this a little bit bigger. All right, so now you can see the blue dots pretty clearly. So anywhere there's a blue dot, basically what that is I've programmed this program, I've built an indicator that will put a little blue dot on the chart and ring a bell for any of the stocks in my watch list that trigger a potential entry signal. Now I don't buy a stock just because it has a blue dot. I have to visually inspect it to see if it meets all of the rules. Now I can tell you that MGA met my rules right here on that blue dot, and it met it here on this one as well. It actually met my visual rules there, but it didn't trigger the blue dot. There's a reason for that. It's because it happened in the first half an hour. We've got a little bit different set of rules in the first half an hour. But let's just use this first blue dot as our example. So I'm going to just zoom out on this a little bit here because I want to explain why I've drawn these lines on here. So I'm going to take those lines off for now. So one of the key things that I said earlier is that it's real important to assess the reward potential for the risk you have to take. So I do that using something called reward for risk lines. I'm going to draw some lines on here that look just like this. Now the blue line that I've drawn is my entry price. Okay, so I had an entry signal at on this stock at $52.26. The stop loss or the support price is $52.07. The difference between those two prices, $52.27 entry price plus minus the support price of $52.07, is 20 cents a share. That means if I buy 1,000 shares of this stock, I am taking $200 of risk. Now you can leverage trades like this 3-to-1, so you don't have to spend $52,000 to buy 1,000 shares. You can spend 1/3 of that amount if you have a broker that gives you 3-to-1 leverage, which my broker Desjardins does. So for putting up, what's 52 divided by 3? 14, 17,000, let's call it $18,000, a little under $18,000. So for $18,000 in capital, I can take $200 worth of risk. Now this is a capital intensive trade. Most of the trades aren't this capital intensive, but this is a $50 stock. I mean, we don't get to pick which ones give us entry signals, they just do. Now then the next element is how much does this stock make in terms of the reward or of the risk you took. So notice there's lines drawn above here that are multiples of the space between my blue line and my yellow line. Blue line, entry price, yellow line, support price. So at the first line here, which is kind of a light green, the stock at that point is up a reward for risk of 1. Now it's up 2, and then 3, and then it pulls back for a bit, goes back down to 1, and then it starts to move up again, goes to 4 and 5. So the very best that this stock has done today is earned a reward for risk of 5. That means if you took $200 worth of risk, you made, if you got out of the high, and we wouldn't have got out of the high, but if you exited at the high, you had made $1,000 for $200 worth of risk. If you took $1,000 of risk, you made $5,000. All right. Now, using our rules, using something called reward for risk multiples, we had an exit signal right there at 53.06, and so our exit strategy would have earned us a 4-to-1 reward for risk. If you're just holding these into the close, which is what I often do, you're currently sitting at 1, and we've got another hour and a half until the close, in which case it could go back up to here. We'll see how that progresses. All right, so that's the day trading process. So let me just summarize. We can build our watch list first. We can do that with Stockscores, or we can do that with the process that I just showed you. I start running that process about 10 minutes after the market opens, and I do it throughout the first 2 hours of the day. I'm building my watch list. Once I have my watch list built, I monitor the stocks in my watch list for entry signals. If they give me an entry signal, then I do my risk management calculation to determine how many shares to buy and then execute the trade. All right, so we're going to come back to this later on. I'm just going to jump back to the presentation now and continue along. So here is a stock that I traded yesterday, PTBI, and we'll probably look at this again today, but everywhere that there is a blue arrow, I had an entry signal on that stock. And so if I was to jump back over to this program and bring up PTBI for yesterday, and I'll just have to make this a little bigger so you can all see it, and just go back to yesterday. See all those blue dots on there? All those blue dots basically correspond to the blue arrows that I just had on the chart. So I bought this stock right here. I bought it again right here, and it went up on a nice run. Gave an exit signal there on a pattern break, something called a parabolic trend break right there. All right, so we'll come back to this one a little later. All right, so that's what day trading is all about. Notice that this stock traded very abnormal volume. It traded statistically significant abnormal volume. So the process that I use on Stockscores or with the real-time charting program that I'm using will give me the ability to put that stock on my watch list, and then I monitor it in real time looking for entry signals. All right. So how do we create the day trading watch list? Let's just summarize. The most eligible stocks can be found in the first hour of the trading day. So that process that I showed you, I'm doing that over and over and over again for the first hour to build my watch list. And from that watch list that I build in the first hour, I'll get 80 to 90% of the trades that happen in the day. I can continue to build my watch list throughout the day to find the odd other trade that comes along, but most of the good trades will actually be signaled from the watch list that I create in the first hour. So you can actually day trade pretty effectively if you can only look at the market for the first 2 hours of the day. And then the rest of the day, I often don't even look at the market. I just take all my positions in the morning in the first 2 hours and then exit them in the last hour. And that's sort of the process that I do. All right, now let's talk a little bit about swing trading. Swing trading is holding stocks for a little longer, but hardly long term. Typically holding for anywhere from 2 days to 2 weeks. We are, again, looking for stocks that are trading abnormally, stocks that come alive with some abnormal price and volume action, using something I call an action candle. So the process, again, can be done in Stockscores or in a real-time charting program, third-party charting program. Here is Stockscores. We're going to run a different scan this time, and again, this is one available to my active trader students. It's called the Stockscores Simple Swing. So anyone who's taken my active trader course has access to that scan. I can run the report and identify today 84 stocks that meet the criteria of that scan. Now my next step, and it's a little different than what we just showed with the day trading process, my next step in this process is to visually look at these charts one at a time and look at the daily chart for a certain kind of chart pattern that I'll show you how you learn in a moment. All right, so I'm cycling through these charts and I'm looking for a very specific little pattern. So this one's not bad. This stock trading sideways became abnormal today. Let's take a look at the 1 month intraday on this chart, or actually make it a 15-day. So this stock, you'll notice, was really boring. Now let me just explain what we're looking at here. This chart is a intraday chart. Each bar or candle is a 60-minute candle, and this stock goes, or this chart goes back 15 days. So today is here, and the previous 14 days is here. Notice that this stock is dead. Nobody cares about this stock. And then this morning on the open, it traded big volume and made a big price jump right on the open. You don't have to be a rocket scientist to know that that tells us something about what the market thinks of this company. So just based on that, in the first hour of the trading day, you could have picked this stock up at $1.95. Now, right now, the stock is at around $2.10. So it's already gained about 8% in just the last few hours. What is key, however, is that you needed a tool to find it, because if you wait to read about it in the newspaper or hear about it on TV, you're too late. And that's what the market scan tool allows us to do, is just find these things early. So I can continue to cycle through these charts. I'm not going to go through all of them, but I'll see if there's anything else that's a good example of what we want to see today. So far, I don't see anything else. And you'll notice I'm going through these pretty quickly. This is one that was good yesterday. I'll just show you yesterday's action. So again, there's the stock. Nobody cares about it. And then it came alive yesterday, jumped up to $5.30. Today, it's at $5.65. So what's that? 35-cent move on a $5 stock. Another 7 or 8% move, but in just a day and a half. All right. And this stock still hasn't given an exit signal. It could go up to $7 in the next week. We don't know yet. All right. So that's the process, is run the market scan, look at the charts. This is not bad. Look at the charts. If they have the right kind of pattern, there you see it dead, comes alive, and up it goes. I mean, the rules for my strategies aren't really that complicated. There's some extra things I haven't told you about in terms of what the patterns need to be, but I can write the rules of my strategies down on the back of a napkin. I mean, they're not very difficult. What is important, though, is that you need a tool to find them. And that's where the market scan comes in. It really gives me an advantage to being able to search through every stock that trades in North America and find the stocks that are doing the right kind of things early. Now, we can do that swing trading process in this program as well. So I'll just shrink this chart down here. And now we do the process a little differently than the day trading process, but it starts off with the same scan. I'm just going to run the scan here. It goes through every stock that trades in the U.S. For the Canadian market, we have to use Stockscores. This program doesn't track U.S. or Canadian markets. I then grab the stocks that are trading actively and copy them, and I paste them in this little screen over here, which calculates for something called an action candle. An action candle is the signal or the trigger point that stock or is worth looking at. Now I'm going to try to find some from today. Let me just, it was a very kind of a weird day today. There was not a lot of action in the market today, so I just want to see if I can find one that gave us a signal today. Maybe this one. So see how there's a pink dot there? This isn't a great example, but that's what I'm looking for. With this strategy, I'm looking for pink dots. Day trading, I look for blue dots. Swing trading, I look for pink dots. See if there's any other examples. Maybe this one. Nope. As I said, the market didn't really give us a lot of swing trading signals today. I ran this process this morning. Here's one that gave a signal a couple days ago. Wasn't a great one, but there you see a pink dot. All right, so we then do our risk management. So our entry price was the blue line. Our support price is the yellow line. This trade, as of right now, is up 2 to 1. That means if you risked $1,000, you're up $2,000. If you risked $100, you're up $200. That's how these lines are drawn on there. All right, so that's the swing trading process. Now, let's go back to the presentation and just touch a little bit on how you learn this stuff. I'll tell you how I learned how to do this. When I was in my early 20s, I sat and basically charted all of the stocks that did really well and looked for patterns. So, you know, when I was in my early 20s, I was a university student. I would spend 8 hours, 10 hours a day looking at charts, looking for patterns that occurred over and over again that predicted stocks that did really well. I did that for 8 years. It took me about 8 years to figure out what those patterns were and how to capitalize on them. And through that 8 years, I did pretty good in the market. I mean, I was a kid in university. I was able to pay my way through school. I drove a Porsche 911 to school as a 20-something-year-old kid. Probably had a lot of people not like me very much. But I love cars, and I've always loved cars, so that was my little thing that I did. And as I worked my way through school, I was developing my trading strategies, and it took me a long time to get it right before I really started to make some real money. That's how you can do it. You can develop and test your own strategies. The other alternative is to have me teach you mine. So for the last 15 years, I've been teaching people my strategies, both for day trading, swing trading, and position trading. And I'll tell you, very simple, it's way easier to just have me teach you. I've been doing this for 25 years. It's a lot of time and effort to figure this out on your own. And I have made tens of thousands of trades. I've spent probably 20,000 hours, probably more than that even. Malcolm Gladwell in his book about being successful says you need to do something for at least 10,000 hours to be good at it. I've spent, I'm guessing, well over 20,000 hours studying charts and markets and learning how to do it. And I put all of my knowledge into books and videos and that sort of thing. And that's how you can learn it. So the Stockscores Trader Training Program starts with my basic book, which is called The Mindless Investor. You can buy that off of our website. Go to stockscores.com. It's, I think, $36 with shipping. And I'll teach you kind of the basic concepts of my approach. Not enough to really make a lot of money in the market yet. I think it's just giving you a good foundation for the next level, which is called the Foundation Course. This is where you learn the tools and the basic knowledge you need to be able to apply my strategies. So how to read chart patterns, how to do risk management, what are the 6 elements of chart patterns. Those are all covered in the foundation. I'll show you this stuff in a moment. And then you start to learn the rules for my strategies. So that's broken up into 2 packages. One is called the Active Trader Strategies, which is day and swing trading. And then we have the Investor Strategies, which is longer term trading. Each lesson in the foundation has a written component, a video that explains it, me teaching it just like I'm teaching you today, an assignment, and a test. And for the Investor and Active Trader Strategies, there's a written lesson and a video. So let's jump back to Stockscores, and I'll just show you this now. On the toolbar in Stockscores, we have the education area. So after the presentation today, you can jump back in here, and you can see that there's all of these different lessons here. I can open all this up. Let me just expand all these here. So there's a whole bunch of videos and written lessons, assignments, tests in the education area. So the first section, which is called Getting Started, is a set of lessons on very basic things. So what are the basics of charting? How do the Stockscores indicators work? Different basics of how to use the Stockscores charts, how the market scanner works. All of those videos are free to watch. If you want to watch one, just click on the video and hit play, and that video will stream to your computer, your iPad, your phone, whatever device you're using. All right, I'm going to jump back here. Now the next section is something that you have to pay to have access to. It's called the Foundation section, and it is the core skills for being able to put my strategies into action. So as I said, how to read chart patterns, there's a lesson. So I can click on this little lesson icon and read all about it there. I can watch a video that explains it, me teaching the different concepts of the predictive chart patterns lesson. So again, I just click on play. I can make this full screen if I want, so you can see all the detail in that particular lesson. I can shrink it down, pause it, whatever. We also have an assignment. So once you've gone through the written lesson and the video, you're now ready to start applying what you've learned and do an assignment. So there's all the questions in the assignment. If you want to know the answer to the assignment, there's a video that gives you the answer to the assignment. And again, you just stream that. This video is only 6 minutes long. It gives you the answers to the assignment so you can assess whether you understand those concepts and did it properly. The final thing that really helps you assess whether you understand the concepts of that lesson is a multiple choice test. So this is a do-it-yourself test. You run through. Once you're done the test, you submit it. It tells you what you got out of whatever the number of questions. In this example, there's 10 questions. It tells you the right answers. It gives you an explanation for why that answer was correct. and you're just assessing whether you understood the concepts or not. If you get 5 out of 10, well, you got to go back and probably do the lesson again. If you get 10 out of 10, great, you understand it, you're ready to move on to the next lesson. So that's how you work through the foundation. And then once you've done that, you can start learning my strategy. So this morning, what I was showing you was something called the intraday pullback strategy. This is a day trading strategy. I do anywhere from 2 to 10 trades a day on this particular strategy. It's my favorite day trading strategy right now anyway. And that's what I do all day. So the examples that I showed you earlier fit those rules. And again, if I wanted to learn those rules, click on video and watch the video, and it will explain how that particular strategy works. It's a 17-minute video, so it's not very complicated, explaining how that particular strategy works. The swing trading strategy I was showing you is right there. Again, there's a video and a written lesson that explains how that works. So that's a quick tour of the Stockscores Education Center. Just quick overview, the foundation again is the foundation course, gives you access to the foundation lessons. It's the core skills that prepare you for the implementation of my strategies. The investor course gives you access to the foundation lessons, plus it gives you access to the investor strategies. It also gives you access to the investor strategy market scans. So when I'm in the market scan tool, if I've taken the investor course, I have access to these scans. I can run the Stockscores Simple Canada scan to look for stocks meeting the criteria of that strategy. And in just a moment, I can go through all of the stocks in Canada, and there's a good one. ELR, that's a good-looking stock right now if you're looking more for a position trade. T.ELR, I think that's got good potential to go higher. Okay. You get email support from me if you are one of my investor students, and you also get 6 months access to this tool, the Market Scanner, for free, and then after 6 months, you can renew that tool at $300 a year. The third course option is the Active Trader course. You get everything in the foundation, you get everything in the investor, plus you get the Active Trader strategies. So you get my day trading and swing trading strategies. You get access to all my scans, the investor and the Active Trader scans. As always, you get email support from me. You get to use the tool for free for 6 months, and then after that it's $300 a year. You also get access to my proprietary real-time indicators for this program. The thing that puts the little blue dots and pink dots on the chart, the thing that rings the alarms when these things trigger trades. You can see I've got a whole bunch of stuff that I haven't even gone into today. I wanted to keep it simple, but there's a whole bunch of indicators. You see here message candle, this particular indicator, the Tyler MA Cross indicator. It's all in this part of the Active Trader program. The other thing that you get is makes you eligible for my live trading service. So every day, I tell people what I'm buying and selling. For the first 2 hours of the day, I build my watch list, and I tell people what I'm buying and selling. I tell people all the stocks that trigger entry alerts, and I do that in real time. So if you have taken my Active Trader course, you are eligible to participate in that service. It costs $195 a month, but if you don't want to do the work yourself, if you want to just follow my trades, take my Active Trader course, you're then eligible for that live trading service. I don't offer it necessarily every month. Sometimes in the summer I'll take some time off, but for the most part, every month at the start of the month, you subscribe, and I'm going to do all of the work for you. It's a great way to learn, and I mean, hopefully you'll just be able to do it on your own eventually, but for some people, they're working at their job, they can't really watch the market as closely as they want, and they just want me to tell them what I'm doing, and they just listen to my calls. I'll just call out the trade. So for example, this morning, I called out a trade on WU, and I'll show you where I bought it. There's my blue dot. I bought it right there, and I actually sold it up here because I felt it was going to get stuck at resistance. It turned out to be a great trade, made a 2-to-1 reward for risk. So if I took $100 of risk, I made $200. If I took $1,000 worth of risk, I made $2,000 in the course of about half an hour. All right, so that's another component of the Active Trader course. Finally, there's mentorship. If you would like me to coach you one-on-one through any of these packages, if you want to do the Active Trader course or the Investor course, but you really want one-on-one coaching, then you want to do the mentorship. We meet via web meetings. Basically, we use an online meeting program, and you're at your house, wherever you are in the world. I'm wherever I am, I'm in Kelowna, British Columbia, and I just show you things. We typically meet once a once a week online, but if you want to meet more often or less often, it's up to you. I give you homework to do after each meeting, so you have something to go away with, and that's just another way to learn. The knowledge is no different. Basically, you get everything in the Active Trader course, the Investor course, and the Foundation. It's all the same information. It's just me holding your hand through the learning process. And for a lot of people, that helps them learn it quicker. So costs. Foundation course, $995. Investor course, $2,495. Active Trader, $34.95. Mentorship, $74.95. These prices are in Canadian dollars. I know we have quite a few people in the webinar today that are in the U.S., so if you're in the U.S., you can discount these prices a bit because your dollar is stronger. You can also upgrade at any time. So if you do the Foundation and you then want to upgrade to the Investor, you pay the difference plus $250. So the upgrade cycle there is going to be $1,745. If you go from Investor to Active Trader, you're going to pay $1,250 to upgrade. So if you think you're going to do Active Trader from the beginning, you're best to subscribe to the Active Trader first because it's a little bit more expensive if you go through the upgrade cycle. But some people like to work through it step by step, and that's certainly possible. Now, for those that are in Canada, we have a little partnership agreement with Desjardins Online Brokerage. They subsidize the education. So if you have an account with them, and again, this is only open to Canadian residents, but if you are in Canada and you need a broker, I strongly recommend Desjardins. We'll have someone from Desjardins come on in just a moment to explain what they're all about. But they basically pay me to give you a discount on the course material. Now, they've been my broker for 7 or 8 years. I think they're a great broker, but nonetheless, they're also giving you big discounts. So the Foundation course is free if you have an account with them, so you save $995. The Investor course is $1,000 instead of $2,495. The Active Trader course is $2,000, and the Mentorship is $6,995. So pretty substantial discounts if you have an account with Desjardins. All right. Now, we have from Desjardins Wayne online this morning, and I'm just going to unmute him here. Oh, he's unmuted already. Wayne, are you there?
I am here, Tyler. Can you hear me?
I can hear you great. So Wayne, I'll give you a couple minutes to just talk about your company, and then we'll come back on and I'll talk about what went on in the market today. Go ahead, Wayne.
Great. Well, thank you, Tyler, and thank everyone for joining us on this webinar. We're very pleased to sponsor this education series with Stockscores. Desjardins is safe. Disnet is the online brokerage for the Desjardins Financial Group. We are the 6th largest financial institution in Canada, and we were recently rated in a Bloomberg Markets report as the 2nd safest bank in the world. If you want to if you want to read the article, you can just Google Desjardins safest bank, and you'll find the Canadian business article detailing that. To put that in a Canadian perspective, TD was also mentioned in the article as the 5th safest in North America, but that didn't even crack the top 20 globally. This is important for you with past events like the financial crisis when we saw several large financial institutions go insolvent. It can make you sleep better at night to know the financial firm you do business with is rated very safe. And we're also a member of the Canadian Investor Protection Fund. Number 1 in customer satisfaction, Disnet has been awarded number 1 in customer satisfaction by J.D. Power and Associates, and we have won the number 1 spot 4 out of the last 5 years. We promise to be there for you from the time you open and transfer your account to support using our platform and tools. Reliable, cost-effective service. We were the first discount brokerage in Canada and have more than 30 years of experience. And this experience translates to a reliable platform you can count on. We offer real-time streaming quotes and fast execution. We're a direct access broker, which means your trades hit the market in 1/10 of a second, where most other bank-owned brokerages use something called straight-through processing, which basically equates to you sending an email to their trading desk. Most other direct access brokers actually charge ECN fees, which we do not. Active traders can trade as low as $5, but even if you're not an active trader, everyone can trade for $9.95 flat fee equity trades. We have very competitive margin rates for those that trade with leverage and offer 3-to-1 buying power for experienced traders. Powerful tools and education. At Disnet, we know how hard it is to consistently beat the markets and manage your account, so we're committed to bringing you powerful tools. We offer the Stockscores Market Scanner as well as Stockscores education to our clients at substantial discounts for Stockscores members looking to upgrade their knowledge and take their trading to the next level. I would encourage you to visit our website, which is disnet.com, and get more information. Sign up for a demo of any of our platforms. If you have any questions, please feel free to contact me directly or Daniel. I think Tyler will put our contact information up. But the best way is if you just want to fill out this poll. If you select yes, we'll get your contact information and we can contact you directly.
All right, thanks, Wayne. Great to hear you again. And Wayne is in the Vancouver office, so anyone in that's contacting them, you're basically talking to him in the Pacific time zone. I put up a poll here rather than have you have to write down his email address and phone number and stuff like that. If you just want him to send you his contact information and a little bit about what Desjardins Online Brokerage is all about, just reply yes to this poll, and I will have them send you an email either later today or tomorrow, and then you can follow up if you have an interest in opening an account for them. Of course, you get some pretty great discounts on my education through Desjardins Online Brokerage, so that's a great incentive. But other than that, I mean, like I said, I've been trading with Desjardins for 7 or 8 years, and I really find their service great. They've won the J.D. Power Award for Best Broker in Canada, many times. I think 3 out of 4 or 4 out of 5 of the last years. And so it really speaks volumes about the kind of service and things that they offer. And they're cheap. Their commissions are low. So that's a real good incentive as well. All right, I'm going to stop this poll, and we're going to get back to the presentation. So let me just close this down here. And thank you for everyone that answered. And I will pass on your information to Daniel and Wayne after the presentation. So I'm going to talk just quickly about the upcoming live class, and then we're going to look at the market and do some analysis of what went on today and just kind of give you some sense of how I think about the market each day. So Saturday, May 23rd starts the next online learning program. So what I showed you today was what you can get access to online, which is your all your strategies in the education center, the foundation lessons, email support for me, all that stuff that I talked about. But what I try to do a few times a year is add on some live online trading or training. That says trading there. It should be training. And so starting Saturday, May 23rd for the next week, I'm going to do live online training to complement what is in the Stockscores Education Center. That starts Saturday, May 23rd for about 3 hours. We're going to do an overview of the foundation course where I take you through step by step all of the different concepts in the foundation and really show you how they all connect to one another. So it's a Saturday morning, Saturday, May 23rd, and anyone that buys the investor course or the active trader course or any of my past students that want to do a repeat, they can attend the foundation course overview on Saturday. The next week, Tuesday to Friday, so in the evenings, we're going to do investor market scanning. So in the evenings, I'm going to run market scans to look for position trades, and that's going to run Tuesday night till Friday night for about an hour. All of these sessions are recorded, so if you're not able to attend them live, you can watch the video the next day or a week later or whatever. The reason it's running Tuesday to Friday, and normally I do it Monday to Thursday, but Monday is a holiday in the U.S., so the U.S. markets will be closed. That'll make the Canadian markets pretty dead as well. And then also that week, from Tuesday to Friday, for the first 2 hours of the day, I'm going to be doing my active trader live trading. So I'll show you the process that I use to find day trades and swing trades. I will actually make trades. I'll tell you, here's a trade that fits all of our rules, and we'll do the risk management. We'll just do everything that you're going to learn in the course. We'll do it in real time with real money, and I'll call out the trades just like I do for my monthly service. So anyone that registers for the investor or active trader course before May 15th, you can get this live bonus training for free. After May 15th, there's a cost to it. It's $495. I'm trying to give people some incentive to get registered before the last minute because I want you to have some time to work through the material before we actually start doing the live class. And so by giving a $495 discount on the live online trading, hopefully that's a little bit of an incentive to take action before May 15th. So it's in your best interest to register before May 15th because you're going to get a discount, but you're also going to have a little bit more time to go through the material before the class. So if you have any interest in the May class, I'm going to put up another poll here, And again, all that I'm going to do if you answer yes to this poll is send you an email later today with some information on the class in May. Again, the pricing is, I showed you that. You can either pay the regular price or you can open an account with Desjardins. If you have an account with Desjardins already, you can do that and basically attend that May class. So I'll leave this up. If you say yes to any of these options, you're going to get an email from me. Now, if you are one of my current investor students or one of my current active trader students, let's say you took the course a year ago and you want to just redo the live online training, it's $195. So I've sent out a few emails. I'll send out a couple more to that group before May 15th, and there'll be a link in there where you can register to retake the class. You don't have to pay $3,000 again. You can do the retake for $195. And I'll send out some emails about that as well if you would like to potentially do a redo of that class. So I'll just leave this up for another moment. Now, if you're watching this presentation, this webinar today as a video because you weren't able to watch it live and you want to know some more information about the classes, you can either go to stockscores.com/learn or email me. My email address, tylerb@stockscores.com. I'll put that up on the screen in just a minute, and I'm going to close the poll in just a second here. So if you haven't answered the poll yet, you got about 5 seconds before I shut it down. I got to figure out how to shut it down. Hold on a sec. So 5, 4, 3, 2, 1. All right, closed. Thank you very much for answering. And as I said, if you answered the poll that you want to get an email, I will send that to you. Otherwise, I won't bug you. There's my email address on screen, tylerb@stockscores.com. We're going to do some analysis of markets in just a second, but I just wanted to get this stuff out of the way, and then we can sort of talk about what my thought process was for today. So let me do that now. First thing I want to show you is a chart of the S&P 500. Now, I look at this every day because it really gives us a sense of what kind of a day it's going to be. The market opened up today. So this is a 2-minute chart of the S&P 500 going back 3 days, basically, 2.5 days. You'll notice that the market opened up this morning and it quickly went down. It went below its open. So in my mind, I know in my mind that that means it could be a rough day. Anytime the market moves down from its open, the sellers are in control of the day. I want to show you another chart. This is a 60-minute chart of the S&P 500, and I've had this line drawn in here for a while because it's the upward trend line that the market has been in for the last month or so. And this morning, or about 3 hours ago, that line was broken. So that tells me that, again, the sellers are more enthusiastic than the buyers. And on a day like that, I want to be pretty cautious. I don't expect to see a lot of good trades on a day like today because the market is moving down pretty sharply. We've actually been in that condition for a few days. The market rallied up to resistance on Monday. It hit resistance, and then the sellers took over. And they've been pushing the market down ever since. So this week hasn't been a great trading week. And for that reason, I take a much more cautious approach to the market. So that's step one, is I always want to have a sense of what the market's doing. I can look at different charts. I can look at the oil chart, which is a pretty good looking chart here. You can see oil broke out 4 or 5 days ago and has been moving higher ever since. There's my little pink dot that we talked about. There was another pink dot back here. So that was a good signal for the market for oil and oil names. U.S. dollar is real important. I always take a look at the U.S. dollar. It's been moving lower. That helps commodity prices. So if you like to trade the oil stocks, if you like to trade the mining stocks, this has been beneficial because the U.S. dollar has been moving lower. And it's been moving lower for about 3 or 4 weeks. So I've been bearish on the U.S. dollar short term since it formed this falling top here. So that's kind of the analysis that I do. Now, specifically for day trading and swing trading, my steps are, and I showed you this already, but I'll run it again. I run my gainer scan. I'm just going to change this chart back to a 2-minute. And I grab all the symbols and I paste them in this screen here and I sort by number of trades, grab anything that's liquid enough, paste them into this screen where it calculates the values for some of my proprietary indicators. I sort it by this expected abnormal volume indicator, and then I start cycling through the charts looking for the right entry signals. So MYCC gave an entry signal right here. It went up 1-to-1. MGA gave I'm just looking at the blue dots, so it gave an entry signal right there. It went up 5-to-1. Electronic Arts gave an entry signal right there. It went up about a half. I'm still holding this one. I'm down a half on it. WU, it went entry signal right there. It went up. I don't have the lines on here anymore. Let me just draw the lines for you. It went up 2 to 1. I actually sold it at 2 to 1 this morning because the market was falling off. I decided to do what I call a Steve Miller exit, where I take the money and run. Hopefully, if you know anything about Steve Miller's music, you'll understand why I call it that. So that's the process. There hasn't been a lot of great trades today because the market is in that sell-off phase. Now, if the selling pressure picks up, then I switch gears and I move to a different strategy, something where I trade what's called the VIX. The VIX is well, this particular ETF here is based on the VIX. The VIX is the volatility index. It looks at the implied volatility in the options market for the S&P 500 futures. Essentially what it does is it goes up when the market goes down. So when there's fear in the market, we look to trade the VIX because it's the easiest way to make money when the market is correcting. And you can see the VIX has been going up while the S&P has been going down. And it's actually been going up quicker than the S&P has been going down. So that's what I will start to do when the market starts to sell off like it has been today. And again, look, there's blue dots on here. It's basically the same set of rules. We just have a little bit of a tweak with how we trade the VIX in terms of what we look for abnormal volume. We really look for a market that's trading on fear, and when it is, we'll trade the VXX. All right, so that's basically what I've been doing today. There have been no swing trades today. I really tried to find some because I wanted to put on a good show for you all today, but unfortunately there just hasn't been anything. And again, you got to do what the market tells you to do, and the market's telling us today to sit on our hands. My electronic arts is starting to pick up. This often happens in the last hour of the trading day. We're coming into the last hour right now. So, you know, it hasn't done anything all afternoon, but it's certainly held up a lot better than the market. Again, looking at the S&P 500, S&P's been going down all day. Electronic Arts, which I believe had earnings yesterday, has been pretty stable, and it's starting to tick higher. So right now I'm sitting at a very small loss on that stock, but I'm fairly confident that I'll get back at least to break even or a little bit of a profit. WU had a good profit there. MGA had a good run. There have been a few stocks today, but today I would say was a pretty marginal day for trading. You know, but again, market's down. I don't know what the Dow's down, but it's down pretty substantially this morning. And we're also getting a breakdown in the market. So if you are, you know, watching the market, I think you got to be a little cautious here. I think we're going to retest the lows from early April. Quite truthfully, I welcome that. The best markets come out of weakness. So when you get a correction back to a support, so here we had a move down. Let me just blow this chart up for you so you can see this a little better. This is a real important lesson. Markets were ugly here, but out of that came a good rally. Markets were ugly, and out of that came a rally that lasted 4 weeks. Now we're getting a little bit of ugliness. I think it's going to go down to 205 in the SPY, and then we'll probably get a rally through the later stages of May, maybe second half of May, that should bring us back to those highs again. So what people tend to do is they love the market when it's at the highs because they've been watching it go up for a while, and they get real aggressive with buying. And then they hate the market after it's been correcting because it's been feeling ugly, and they avoid the market and they miss out on the rally. So the market's correcting right now. I want you to be cautious, but when the market gets down around 205 in the SPY, you want to start looking for opportunity again, because that's what will typically, that'll be a turning point for the market. So we'll see if that happens. May not go all the way down to 205, but I think probably will. It's probably 70% chance it goes to 205. That's only a 1.5% move from here. It's not a big move, but I think once it does that, it could do that tomorrow. And then we could be setting up for a nice little comeback rally, and trading will get better again. So it hasn't been good for the last 2 or 3 days. One stock that was great this week, and it's really been my hot trade of the month, is PBTI, or PTBI, sorry, PTBI. I earned a risk reward of 21 on this stock yesterday. So I bought it here. I added to it here. I think I added some here as well. So I ended up building my position and then really having a real rock and roll run through the afternoon. So I made a 21 times risk on that trade yesterday. So I'm not going to tell you how much I risked, but if I risked $100, I made $2,100. If I risked $100,000, I made $21,000. So that's a great trade, and it I had a few losers yesterday as well, but it more than overcame the losers that I had yesterday, and that's trading. You know, you don't know when you're going to have the hot ones come along, but they do come along, and I just trade numbers. I trade over and over again, and that's really the basis of my approach. So hopefully you've enjoyed the presentation today. I want to thank everyone for joining us. If you're watching this as a video and you have any questions, there's my email address. Even if you're not watching it as a video, if you have questions, there's my email address. And don't forget, we've got a few more webinars coming up leading up to the May 15th class. So if you want to learn a little bit more about my investing approach to the market, not just day and swing trading, go into Stockscores, go to the homepage. Just click on homepage here. There's my schedule. I've got three more. Saturday morning, I'm going to do the secret to finding hot stocks, one of my real popular webinars that I do. So that's Saturday morning, 11 Pacific, 2 p.m. Eastern time. And then an investing-oriented webinar on Tuesday night next week, and a active trading-oriented webinar on Wednesday next week. And of course, the deadline for that bonus training is May 15th. So if you have an interest in taking my course coming up here, it's going to be a while until my next one. So this is a great opportunity to get in for my education before the May 15th deadline. And those sessions will give you a little more information on that. If you answered yes to my question on whether you want to get some follow-up email, you will get that email later today. And we'll go from there. Now I'm going to answer a few questions because I've had a whole bunch coming in. Let me just see here what we got. I didn't see any live trades while I was talking today. All of my trades came in the first 2 hours. It's that kind of a day today. I would have loved to buy a stock while you were watching, but unfortunately the market wasn't really getting that or giving us anything today. What is my outlook on the silver rebound? I don't know if there is a silver rebound, but let's take a look at, I'll take a look at the ETF. SLV is an ETF that mirrors silver. I don't really see any reason to be bullish on it yet. It's still in a downward trend. The tops are falling. That's pessimism. And very similar to the gold chart. I think you have to avoid silver right now. Still, that doesn't mean it can't change next week, but for now, I think it's still not looking great. So next question, do you begin your day trading by building a list of stocks that are publishing earnings with expected earnings? No, I don't care about whether they announce earnings or not. I do my watch list based on my scans that I showed you. So it's entirely based on the scans, although many of the stocks may be announcing earnings, but I don't necessarily do it that way. So next question, can you comment on how you decide your risk tolerance based on your portfolio size? For instance, is $1,000 risk tolerance appropriate if you're trying to manage $1 million portfolio, or is it too small? So great question. The most important criteria for determining your risk tolerance is your how well you sleep at night based on the risk you take. You know, if you have $1 million portfolio but you don't like losing $1,000, it really bothers you, then don't take $1,000 worth of risk. You can desensitize yourself to risk over time by being successful. So I tell all of my students to start trading with no risk. Don't take any risk, just paper trade. I built a trading simulator. You can see it at tradescores.com, and this is something you can use for free. If you want to just practice trading without taking any risk, use the simulator at tradescores.com. You can buy and sell stocks. It tracks your performance over time and really gives you an accurate assessment of whether you're doing this well or not. And so that's all available there, and you can follow your trades. You can see here some open trades that I have. These are more position trades. Most everything's down today, but overall they're up. And I can track my performance without having to risk any capital. Once you've done that for a while, and you then can start trading with real capital, start with $100 worth of risk, then leverage that up to 200, and then increase that to 500, and then 1,000. And so if you have that $1 million or $10 million portfolio, start small, learn, get confidence, and then start to trade more effectively. What time do I run my scans? I run my first scans on Stockscores about half an hour after the market opens. I'm just going to put this back up here. The blue and pink dots might give you an entry signal, but how and when do you decide to get out? So I didn't give you my exit rules. That's taught in my courses, but we have a set of rules for each strategy that are taught in each strategy for when to exit those, and you can do that. For some of people in the U.S., you don't have to subscribe to TradeStation. You can just have a brokerage account with them. For people in Canada, we have to subscribe to it because they're not allowed to be a broker in Canada. I'm just looking at some others here. If you're a Disnat client, which is Desjardins, you get some of the online trading, which I showed you already. Can you please show the DD Plus platform again? Sure, I can. That's the DD Plus platform. It gives real-time charting, 2-minute, 5-minute, whatever time frame you like to trade. And so this is where I execute my trades. Now, Disnat gave me a demo account so that you're not seeing my actual real account, but this is what you can watch if you're a Desjardins client. It gives you all your real-time charting. You can make it bigger. You can have multiple charts, move them around. It's a nice little platform. If I want to buy MGA right now, I can do a market order, click on buy, and I'm going to say no, but it would actually execute that trade in 1/10 of a second. So it's a great platform for active trading. Ryan's asking if all my trades are long only or do I take short positions. I used to short a lot. I find it a lot harder to short these days because you need inventory. The rules are a lot tighter nowadays. So I generally don't short a lot when the market's moving down. I usually just buy the ETFs that go up when the market goes down. Will this be available for replay if you missed the beginning? Yes, I've recorded this entire presentation. I'll send a link out on the video later on. The Stockscores website is delayed, so it's a little bit of a problem in the first half an hour for building your watch list. That's why I use some of those other programs. Later in the day, it's not a big deal, but you still need a real-time program to complement your day trading or complement your scanning on Stockscores. All right, I think I've got all the questions. If I missed your question, I apologize. I need to wrap up now because we're getting a little late and we got the last hour of the trading day here that I want to keep an eye on. So I want to thank you all for attending today. If you have any questions, there's my email address again. And hopefully you can participate in the Saturday webinar, and there's some more next week. Just register on the Stockscores website. Have a great rest of the day, everyone. And as I like to say all the time, trade well.